Welcome back to another episode of Commodity Corner. Joining me today to speak on gold is Phil Carr from the Gold and Silver Company. Iran has become the biggest buyer of gold bars in the Middle East. Why is Iran on this gold collecting rush? It can't be only driven by the US sanctions.
Well, gold, of course, is traditionally perceived as a safe haven. And during times of economic risks and times of crisis, which of course is occurring at the moment in Iran, we are seeing a significant increase in demand for gold. Demand for gold bars and coin investment in Iran has quadrupled amid this flight to safety. And this demand, of course, has accelerated as a result of new US sanctions on Iran. Essentially, what you'll see in Iran is a flock into gold as a means to protect wealth and preserve capital because of the devaluation that you're going to see in their currency as a result of these US sanctions, as a way to hedge against the economy and uncertainty which could result from these additional sanctions.
The Industrial and Commercial Bank of China believes that gold will hit $1,300 in December. Is this a realistic price point considering the current value?
Well, that's a really great question. And yes, I do agree that the price of gold could hit $1,300 per ounce by December of this year. If you consider the price of gold right now, which is trading at $1,214 per ounce, and the average gain between 2003 to 2017 was 9.4% over that whole period of time. So over the last 14 years, we have seen an average gain on gold of 9.4%. At the moment, gold is negative in 2018 by over 7% to the downside. So even a 10% move from here, taking the price back above $1,300 per ounce, would only give gold a net positive gain of 3% in 2018. So I definitely think it is possible to see gold reclaim back above $1,300 per ounce between now and December of this year.
How could the potential US-China trade war impact gold?
Well, certainly so far, the spat between the US and China has helped to push the US dollar back to 12-month highs. And that has definitely put pressure on gold, where recently we've seen gold break down to the lowest levels since March of 2017, trading just above $1,200 per ounce. So certainly the escalation in the trade war tension between the US and China does tend to have a positive impact on the US dollar. And if you're tracking gold priced in US dollars, that will have a negative inverse correlation on gold. So often when the US dollar gains in strength, that will have a negative inverse correlation with gold prices going down, and the opposite can be true as well. So the US dollar at the moment is sitting around the 95 level here. We're actually finding resistance around the 12-month highs, which the US dollar so far has been unable to break and close above over July and August. And if we do start to see a further correction in the US dollar, if trade tensions start to dissipate, that could then provide further support certainly to gold prices priced in US dollars. If we have a look at gold priced in a number of different currencies, it's not as heavily impacted by the move here with the US dollar to the upside. So for example, gold priced in pound sterling again here is currently breaking out to 2-week highs, whereas if you're tracking gold priced in US dollars, well, certainly then you need to have a very close eye on the US dollar because of the inverse correlation that will have on gold prices. So far, the way to capitalize on the trade war tensions between the US and China has tended to be via US dollar strength. So each time the US has put additional tariffs on China, that has been perceived as bullish for the US dollar. We have seen breakouts on the US dollar time and time again each time that has occurred, and that tends to put pressure on the metals. So if we do see additional escalation in the trade war between the US and China, typically that does tend to be dollar positive, and you can expect that to have a negative impact on gold prices. If we see trade tensions start to dissipate, that is where the US dollar could then start to correct and sell off, and that could be also a catalyst here for a breakout in gold and silver priced in US dollars. So it's certainly something that you want to be aware of when you are trading gold.
A big thank you to Phil Carr for speaking with me today and sharing his charts. And a big thank you at home for watching. Goodbye for now.